How to invest in digital currencies. Are you looking to get started in the exciting world of cryptocurrency investing? So don't miss this video. Hello, welcome to today's video. Cryptocurrency has grown in popularity in recent years, with many people looking to get a piece of the action. Investing in cryptocurrencies can be a lucrative way to grow your wealth, but it can be a daunting prospect if you don't know where to start. Fortunately, we're here to help. What is cryptocurrency? Cryptocurrency is a digital or virtual currency that is secured by encryption. It uses a decentralized network to record transactions and store data, making it secure and tamper-proof. Digital currency is not dependent on any country or government and can be used to buy goods and services like traditional money. Cryptocurrencies have grown in popularity over the years as more people are aware of their potential and benefits over traditional currencies. The digital currency supports blockchain technology, which uses a distributed ledger to securely store data, verify transactions, and eliminate the need for third-party intermediaries. The most well-known cryptocurrency is Bitcoin, which was created in 2009. Since then, hundreds of other digital currencies have been created, such as Ethereum, Litecoin, and Dogecoin. Each of these digital currencies operates independently and offers different features, benefits and risks. Cryptocurrency has several advantages over traditional currencies, such as decentralization, low transaction fees, and secure transactions. Additionally, digital currency is not affected by inflation or other market forces, making it a viable option for investors looking for a safe haven for their money. However, investing in digital currencies comes with risks that must be considered before investing. What are the benefits of investing in digital currencies? Cryptocurrency offers a unique opportunity to investors. Cryptocurrency is global and has the potential to be incredibly profitable. It can be traded 24/7 and you have access to a wide range of digital assets. Additionally, digital currency is decentralized, meaning no single entity controls its value or issuance. This helps reduce volatility and makes it difficult for bad actors to manipulate markets. Some of the most prominent advantages of investing in digital currencies are transparency. The blockchain technology that underpins digital currencies offers a degree of transparency that is hard to find elsewhere in the financial world. All transactions on the blockchain are publicly visible and users can easily track their investments and monitor the market. Low fees. Cryptocurrency transactions usually have very low or no fees. This makes trading much more affordable and allows users to invest more capital in their positions. Faster transactions. Transfers between wallets are almost instantaneous compared to traditional bank transfers that can take days. Increased liquidity. Due to its global reach, there is always someone willing to buy or sell digital currency at any time, meaning investors do not have to wait for the market to move before entering or exiting a position. Diversification. Cryptocurrencies can help investors diversify their portfolios by accessing a whole new asset class. Investing in digital currencies is not without risk, and it is important that investors understand all possible risks before investing. However, if done correctly, it can be a great way to diversify your portfolio and potentially benefit from the appreciation of digital assets. How to invest in digital currencies. Investing in digital currencies can be a great way to diversify your portfolio, as the market is relatively new and still growing. It is important to understand the risks involved in investing in digital currencies before jumping in. The first step to investing in digital currencies is to familiarize yourself with the different types of digital currencies available. Bitcoin, Ethereum, Litecoin, Ripple, Monero and Zcash are just a few of the many digital currencies you can invest in. Each has its own unique features, advantages and disadvantages. It is important to thoroughly research each option before investing. Once you have decided which cryptocurrency to invest in, the next step is to open a cryptocurrency wallet. A crypto wallet allows you to store, send and receive digital currencies. You can choose between software wallets that are free, or hardware wallets that require an initial fee. After setting up your wallet, you need to purchase digital currency. This can be done through an exchange or directly from the person who already owns it. You also need to transfer your purchased digital currency to your wallet. Now that you have your cryptocurrency safely stored in your wallet, it's time to start trading. You can do this by registering with an exchange or online marketplace. There are also peer-to-peer platforms available that allow you to buy and sell directly with other people. Finally, it is important to understand the risks associated with investing in digital currencies. Cryptocurrency prices can fluctuate, so it's important to monitor the market and have a good understanding of the potential gains and losses you can make. Additionally, some exchanges may be prone to hacking, so it's important to keep your personal information safe when trading on these sites. Investing in digital currencies can be a profitable opportunity, but it requires careful research and attention to detail. Taking the time to understand the different types of digital currencies available, setting up a secure wallet, and learning how to trade on an exchange can help increase your chances of success. What is the risk of investing in digital currencies? Investing in cryptocurrencies carries a certain level of risk. Many of these risks are similar to those associated with investing in any other asset class. These include possible losses due to market fluctuations, fraud and hacking. Market volatility. Cryptocurrency is a highly volatile asset class, meaning its price can fluctuate rapidly and unpredictably. If you are not careful, if the market changes suddenly, you can suffer huge losses. It is important to remember that no one can accurately predict which direction the market will go, so if you decide to invest in cryptocurrencies, be prepared to accept some losses. Scams. As with any investment, there is always the possibility that you will fall victim to a scam. Unfortunately, the cryptocurrency market is full of scammers who try to take advantage of unsuspecting investors. To protect yourself, make sure you do your research before investing in any cryptocurrency. Hacking. As with any online service, there is always a risk of being hacked. Cryptocurrency exchanges have been known to be targeted by hackers, leading to capital losses. To protect yourself, make sure you only use reputable exchanges and make sure your accounts are properly secured. It is also important to remember that investing in digital currencies carries the same regulatory risks as other investments. Make sure you understand the laws in your jurisdiction before investing. In general, investing in digital currencies carries the same risks as other investments. However, with proper research and caution, investors can still reap the potential returns from investing in this exciting asset class. We hope you enjoyed this video, and if it was useful for you, press the like button and subscribe to our channel. We will be happy if you share your comments with us. We will see you in the next video.